Welcome to our single family home retirement strategy video. This is the most simple, straightforward retirement strategy you'll ever see. I want to share with you as far as basically how it works. First of all, if you've been investing in real estate, you may be able to go ahead and do this on your own. But even if you are, I would recommend that you seek out the services of a professional broker or an agent, simply because when an agent is buying for you, you don't pay them, the seller pays them their commission. Therefore, you get all the services of a real estate broker or an agent at no cost to you. Second thing you're going to need is you're going to need to have a professional management company that just specializes in single family homes, not multifamily, not commercial, but purely just single family homes, so they have your best interest at heart and they make sure your rents increase when they should increase, etc., etc. So with that said, the first thing we want to do is we want to determine how much cash flow we would need at retirement. So let's say that number is $10,000 a month. Just from this strategy alone, not from anything else that you have in your retirement, just from this retirement strategy. Okay, then the next thing we want to do is we got to determine how many properties we're going to need to buy to meet that goal. Now this is where the real estate agent can actually help you as far as in determining this. Okay, and again, they're not charging you anything because they're paid by the seller. So let's say in this example we had to buy 6 properties. So what we do first is we go out and buy 6 properties as quickly as we can, but with that said, we make sure we don't overextend ourselves, and we make sure we have adequate reserves set up, so should there be a change in the market conditions, we can go ahead and ride out the storm, so to speak. So once we go ahead, however, and get the properties, determine what we need to buy, then what we do is after this last property is purchase, we quit buying on this segment of your portfolio. And let me explain it this way. What you have sometimes is in stock, you may keep buying Microsoft stock, but you quit buying Apple stock. But that doesn't mean you quit buying all stock. The same thing in real estate. In this strategy, you're going to quit buying as far as in terms of these 6 properties for this strategy. However, outside this strategy, you might still buy and flip home or buy other properties or buy or sell your personal residence. So once we've actually purchased this 6 property, what we're going to do then is we're going to start paying off the first property as the rents increase, $50 to $150, $200 a year. As far as on these, each month we'd have extra cash coming in from those, anywhere from $50 to $200 a month. So all that money goes to pay off the principal on the first property. Once the first property is paid off, then what we do is we continue this process. We do the same thing with the second property. The only thing is now, since the first property is paid off, and let's say the payment was $1,500 and you no longer have that payment, now you can take all that money and pay it down to the principal on property number 2, and the same thing on property number 3 and 4. So you can see as time goes on and you can start paying $2,000, $3,000, $5,000, $6,000 a month on the principal, you're going to see these mortgages start to drop very, very quickly and get paid off. So basically that's what we want to do. After the first property is paid off, we want to continue to pay off each and every one of them. So lastly, after they're all paid off, you can actually retire early. So for an example, in this scenario, if we have 6 properties at the end of 15, 20 years, if they're all renting for $2,000 a month, times 12 months, that's $144,000 a year. If we take $24,000 out for management fees, maintenance, etc., that would leave $120,000 a year, or in this case, $10,000 a month in cash flow. And also, since all these properties are paid for free and clear now, you would also have anywhere between $3 to $5 million in properties that are actually free and clear, depending on what part of the country you're in, how much they appreciate it, etc. So what I want to do now is I want to show you how this works hand in hand with the real estate investment planning software. So now that you can see how the single family home retirement strategy works, with your real estate investment planning software, you just come in here, you click on single family home retirement strategy, you would put in your strategy, whatever the case may be. We already have one built out here, so we're going to show you this, but you could click on new strategy for yourself. We're going to click on this, and this is going to show us as far as 6 properties that are already in this person's portfolio. So what we did first of all is we said, okay, what is the average appreciation going to be in the next 20 years? And if you go over and click on these little question marks, it'll give you some projections to back up this information that we're sharing with you here. What's the operating expenses going to be over the next 20 years? Vacancy factors, rent increases, and the term in this case is going to be 20 years. You can put anything you want in there. If you want to put 15, 30 years, depending on your age, that's up to you. Okay, then the next thing you do is you come down here. Now all these properties are in your portfolio, so all you do is you come down here, you click on these, and what happens, it automatically populates in each one of these. So to simplify this, on each one of these properties, we'll take the first one here on Myers. This is where it is today. This is the rent coming in. This is the vacancy factor, property taxes, etc. So the amount of expenses on this property today is $492 without payment, okay, because we're looking at end of term. We're not looking at as far as in terms of day-to-day cash flow now. This is what is your portfolio going to look like in 20 years when all these properties are paid off. So we start with our base. This is where we are today. But based on these increases, these prices are going to increase. The rent's going to increase, but also the property taxes are going to increase. The insurance is going to increase. So we've allocated as far as for that. So at the end of 20 years on this property, where right now it's bringing in $12,000 a year and $1,000 a month, okay, before any payment or anything. At retirement, you're going to have $3,100 coming in. You're going to have $728 in expenses, so it's going to bring in $29,000 a year or $2,400 a month. Okay, now going on down, following the same property, we bought this property for $180,000. It's appreciated $470,000, so now this property is worth $650,000 20 years later. So what we've done is we've taken each property, and you can see this is another one. We've done the same thing and just duplicated it 6 times. So at the end of 20 years, what you would have is, if you look across the top here, your total income would be $17,000 a month. Keep in mind now, all these properties have been paid off on the strategy that I just explained. If we come on down here, it will show these are the expenses. So your expenses on those 6 houses are $4,300 a month. Okay, if you take that away, you've got an annual income of $151,000 or a monthly income net of $12,639. So that gives you your $10,000 a month and then some as far as per month. The properties, we bought all 6 of these properties. You can see we bought one for $180, $175, so on and so forth, $895, but they appreciated $2.3 million based on a 7% appreciation rate over the 20 years. That gives you net $3.2 million plus in 6 properties that are free and clear, and you have $151,000 a year coming in as far as in terms of cash flow. This completes the single family home retirement strategy.